Welcome to The Quantum State, a podcast exploring the latest research and innovation in quantum computing. Join us as we dive into groundbreaking breakthroughs, trends, and news shaping the quantum landscape. Discover the cutting-edge developments pushing the boundaries of computing technology. Through insightful discussions, expert interviews, and in-depth analysis, we unravel the intricate theories and real-world applications driving this transformative field. The Quantum State also offers updates from BTQ, sharing the company's research progress and innovative products at the forefront of quantum computing. So, embark on this mind-bending journey with us as we navigate the realm of quantum computing, witnessing its potential to revolutionize our world. Welcome to The Quantum State, presented by BTQ, a podcast exploring the latest research and innovation in quantum computing. Today, we have Dr. Peter Rohde co-hosting, and our guest is Professor Jason Potts. He's the director of the RMIT Blockchain Innovation Hub in Melbourne, Australia. You two, along with other folks from RMIT Blockchain and Macquarie, wrote a paper called Quantum Crypto Economics, Blockchain Prediction Markets for the Evolution of Quantum Technology. Now, everyone is so curious about the impact of quantum computers on blockchain and always wants to know precisely how and when and if quantum computing will be the killer of Bitcoin. So can you give us an overview of your paper and what motivated you to work on it?
Yeah, thanks, Anastasia. It's great to be here. This is a thing we've been thinking about for a long time. So Blockchain Innovation Hub at RMIT University, we're a group of mostly economists, but business school types, and we've been thinking about cryptocurrencies and all of the implications around blockchain for sort of 7-8 years now. And one of the sort of elephants in the room has always been quantum. Just what happens? Crypto is fundamentally a compute technology. Quantum is fundamentally a compute accelerant. At some point, these two technologies are going to come together and produce amazing things or destructive things, and we're trying to think that through. But we're business school types, we're economists, we're lawyers, we're accountants. We're not quantum physicists, and that was always a major problem with their sort of thinking. So we managed to persuade Peter to sort of help us understand what this threat model, what this technology actually was. And this is a process we've been talking about this for years now, and we sort of started to try and think through what this would actually be. And so this paper is just one of many, I'd say arguments, one of many discussions that we've had trying to understand what the intersection of these two rapidly evolving technological trajectories, quantum compute, blockchain tech, and sort of how they come together. And this paper, Peter, am I right? This is still circulating, right? I don't think we haven't landed this yet.
We've resubmitted it, but it hasn't been accepted yet.
Yeah, it's a difficult one to sort of to place because there's no sort of journal, the Journal of Quantum Computing and Cryptography. That's not a real thing. So we've always been struggling with trying to figure out sort of which audience to present this argument to. And interestingly, the audience we're wanting to get this in front of now is basically finance, because the thing about quantum compute attacks or quantum compute sort of technological change intersecting with blockchain technology is one of these surprising implications that you don't necessarily know when you're being attacked, because if you've got a very, very powerful set of compute, which quantum sort of brings in a variety of different ways, you don't use it just for blowing things up. It's not an obvious. One of the cleverest ways to use this technology is to secretly sort of steal money. And what this paper really about is how do you know you're being attacked? And so one of the what we came up with is how you know you're being attacked is the prediction markets will start to sort of indicate that, but what those specific prediction markets look like are actually bond prices. So we go deep into finance, and the way bond prices work, such that what their basic sort of reasoning here is that what an attack will look like is you won't just suddenly see the attack, because it's sort of deeply hidden in the financial system. But what you'll start to see is weird behavior in the financial system, particularly around asset prices. And what this paper is doing is sort of trying to put all that together and go, here's blockchain technology, here's how we think it's developing and how it works, here's quantum compute, here's how we think it's going to develop, and you know, what changes we'll expect to see over the next few decades or so. Here's how bond prices and financial markets work, and here's this combination of all of these things. Put that together, and here's how we know you're being attacked. And that's kind of what the paper is doing. A speculative theoretical piece. At the moment, we are, you know, these events we're describing are a long way in the future, but we think they're realistic. And the paper was really an attempt to try and sort of lay out what we think the attack vectors look like, how the different ways they could manifest, and the types of preparations, I guess, that you'd put in place to try and either mitigate them or, you know, depending on which side of the attack you're on, exploit them even further.
So in the paper, Jason, you guys were sort of responsible for the economic side of things, and we were looking at the quantum side of things. From the economic side, let's consider the two attacks that we discussed in the paper. One was the Grover attack that, in principle, gives you a modest but not exponential speed up in inverse hashing, which is what's used for proof of work. So that could speed up the printing of money effectively. And the other attack we looked at is the Shor attack, which could let you compromise digital signatures. And if you can do that, you can either directly take from someone's wallet, or you could falsify a consensus and make fraudulent transactions. So those two different types of attack, how do they manifest themselves in terms of, for example, the bond price model?
Yeah. So let's step back one step before that. So what we're describing is an attack on a proof of work function. So which is just blockchains have security and proof of work systems by performing compute. The compute basically effectively randomizes the ability to write the next block in the blockchain. So it's a way of providing security by performing costly compute. Now, what that has meant in practice, if you take blockchains like the Bitcoin blockchain, is that if I have more compute, I've got a better chance of getting assigned the next block to write. And my reward for writing the next block is some Bitcoins, I think 6 at the moment. So having more compute is a good thing, right? The problem, however, in the way that the Bitcoin blockchain is, in fact, all proof of work blockchains are designed, is that they're designed to sort of, if I come at it with more compute, the algorithm responds by making the computation harder, and then I come out with even more compute. So you end up with this sort of compute difficulty arms race that broadly, the reason you want that to be stabilized is you don't want someone to keep winning that race over and over again. You want it to be a little bit randomized who wins, because otherwise, if I know I'm going to win over and over again, then I can start to behave like a malicious actor rather than someone providing security for the blockchain. So the point of that is that more compute is a good thing in the sense that you're more likely to win. But for the system, it's a thing that needs to be balanced. You can't have one person with the most compute winning all the time, because that's technically an attack. That's a 51% attack. Right, so with that in mind, ask the question, what is the Grover algorithm? The Grover algorithm is more compute. I'm coming at this classical compute machine with my advanced quantum compute. Now, you say, okay, that doesn't sound like an attack. That just sounds like better technology. And you're absolutely right. It's not actually an attack. It's just bringing better, you're just bringing better technology into the factory and deploying that better technology. So what that looks like is I'm more likely to win the race. I'm more likely to solve the compute problem. What that manifests as is now the blockchain is dropping out more coins faster. That's the inflation sort of that's inflation. Now that's an attack in the sense that I'm using my superior technology to win all the time, but from the system's perspective, it doesn't look like an attack. It just looks like, wow, there's an amazing more compute going on there. That's fantastic. Look at all the security. The reason it's an attack is that the same player keeps winning over and over again, but it's going to take you a while to figure that out. But in the meantime, what that looks like is just there's a lot more coins dropping out a lot faster, so that you can start to detect inflation in that system. Now, from any particular user of the blockchain, again, that's not an attack. There's just more compute coming in. What you don't realize is that there's this mounting sort of monopoly building up behind it that at some point could become malicious. But a Grover attack, and again, Peter, correct me if I've got this wrong, a Grover attack isn't actually an attack. It's just bringing superior compute.
That's right. It's effectively squaring the number of hashing nodes you have, loosely speaking. So it's equivalent to someone just buying a whole bunch of extra data warehouses for running their ASICs.
Yeah, and again, that's good, right? You want proof of work blockchains work by doing compute, and someone brings in a whole lot of extra compute. Yay, that's more security. The problem is that from a competitive perspective, it's you've broken the system, because now your amazing low cost or low unit cost quantum compute is going to outcompete the high unit cost classical compute. But if someone comes in with their quantum compute, and then another player comes in with some more quantum compute, and it all stabilizes over to now it's just quantum compute versus quantum compute. All we've done is just shifted the level of compute up. The difficulty setting will ratchet up, and now instead of solving this many, trying to find a number this big, you're going to find a number, a few orders of magnitude larger. We'll just burn that extra compute in the difficulty algorithm, and we'll be exactly where we were before. So, again, is that an attack? Well, kind of, maybe, not really, sort of.
So is it correct to say then that it manifests itself in an asymmetric way? If you consider the subset of nodes that are classical and the subset of the quantum, it shifts the bias towards the quantum until everybody's quantum, and then it's monetarily neutral.
Yeah. So I mean, it'll from the perspective of someone running a classical state machine, it'll feel like unfair competition. Again, is that an attack? Yeah, maybe. But this is kind of an issue for the. This is a competition policy issue, not a criminal justice issue. The Shor attack is different. That is straight up crime.
Real quick question about that. So from what I remember, back in the day, you could mine Bitcoin with a CPU, and then GPUs took over, and now it's impossible.
Yep.
Mine with the CPU. So is this kind of the same thing on the quantum side?
Yep.
And if so,
absolutely.
and then if so, is it that big of a deal? I mean, what do we see in the impact of that?
So, I mean, we're just, this is back in the day, you could mine Bitcoin with a pencil if you were really committed, right? Then you could use a little pocket calculator and then a laptop, and but it's an arms race, right? If I bring superior technology to it, I'm going to keep winning until I've induced you to bring superior technology. So that sort of bidding war to win blocks just basically drew in all the compute resources in the world. But for the first few years, it was just Satoshi and his or her laptop running, and I think there was a few others in there. I think Peter, you were mining it. I mean, you were like mining it right from the beginning, I assume. This is why you're so wealthy.
No, but one of my students was, that's for sure.
Really? Okay. Which
he
one?
Taught me a lesson. Yeah, exactly. Yeah.
But the basic dynamic there is this is the genius of the design. It's an incentive mechanism that draws in compute, and if the competition was only using a pencil and a little laptop, then I can win by bringing my MacBook Pro into the game. But then now they have to bring their 2 MacBook Pros, and then in a relatively short space of time, we're pitting data center against data center. And and quantum is just the next one to come in. Just going, look, if I bring more compute, I can win. And if I'm winning something that's worth money. So I'm going to bring in, so long as that money I'm winning is worth more than the thing I'm I'm paying, the compute resource I'm renting or I'm bringing into the game. I'm just going to keep doing that. But the problem is that it ratchets up in competitiveness because the algorithm, again, the genius of the Bitcoin algorithm and all others that have followed it is that they have an internal difficulty setting that resets. If you bring in, and again, it's lots of competitions have this feature. As that difficulty setting ratchets up, the minimum entry point to play this game is now you've got to turn up with a huge AWS hardware, AWS sort of cloud serving rack, just to be competitive, right? That's where we are now. But a sufficiently cheap and powerful quantum compute can win that. So again, that's where we are. What is Grover? Grover is, technically it's an attack because you're more likely to win, but that's also just more competition. And if there's a thing that comes after quantum, who knows? Maybe neutrino compute. If you can bring your neutrino super collider, whatever, I don't know, making words up here, into that, and that defeats the quantum compute, then technically that's a neutrino attack.
It's
right, but that's how technological competition is meant to work, right? That's not a bug. That's the system actually working.
But that's actually a really interesting point that you made about energy efficiency, and we've talked a little about it before. But the idea that if you calculate in some way, technically you could say the quantum computer is more energy efficient for these calculations, and therefore better for the world because people are very upset about proof of work and the compute power, right? So would that be a fair argument to make? And then over time, ramps back up.
Look, I think that's a absolutely perfectly reasonable argument to make. If there's other margins on it, if we could solve compute just by burying acorns in our backyard, we would do that. But instead we have to burn electricity, and electricity is made with the various ways it is made, some of which are more environmentally friendly than others. So we're allocating a scarce and valuable resource to win a competition to get a scarce and valuable resource. And the economics of this is just that process will continue until those two resources have equal value. And if a Bitcoin is worth $30,000 and you get 6 of them every time you mine one, and there's a probability of 1 in a billion that you get one, and the cost of competing in that is that number times that number divided by that number, then it is rational to deploy those scarce environmental resources to get that other resource, and thus it will always be. But I mean, the thing is, there's an alternative path in history where we started back in 2010, and Satoshi just said, look, we're going to use laptops to build security, because ultimately all we're doing is manufacturing security. And if the security manufacturing process was done with 12 laptops, we could have done that. That would have been fine. It was just the whole logic of it is it's permissionless mining. I don't have to ask the coalition of Satoshi and friends to join the mining pool. I just come in, right? And it's because of that it becomes an open arms race, and because of that I can bring in my superior compute, and because of that. So, if you think about how the real world banking system and financial system works, is that it's licensed all the way up and down. I can't just turn up and go, hi, I'm a bank. I have to get a banking license, and for that I have to have lots of stone pillars and marble, and we've gone to the right school, or whatever it is that it takes to become a banker these days. But it's gated, it's controlled, and that control is precisely what stops the technological arms race. But that's also why modern banking is so horrible, because it's gated and controlled. It's not competing on innovation and entry. It's competing upon, do I have a license? Yes, no. In Australia we have 4 banks, more or less, and they compete on just having the most sports teams or the best logos, or they're not competing on frontier financial technologies. So again, we trade this off. If we want innovation and exciting new technologies, we have to pay the price of that, which is acceleration. And this is the those who are into crypto are sort of going, yep, that's the deal we want. We want better tech. We'll pay the price of that. One of these prices is this particular arms race we're talking about.
So that's talking about the monetary implications of Grover's algorithm. What about a Shor's attack? That one is much more abrupt because you can immediately compromise wallets and consensus. So how does that manifest itself?
And again, I'm speaking as an economist who barely even knew what the word Shor was until Peter explained it to me. But a Shor attack is the other name for that is crime. So what you do with a Shor attack is you falsify a signature. And if you can falsify a signature I see a public key, I figure out the private key, then I do a new transaction over the top with the private key I figured out by using the Shor algorithm. That's correct, I'm assuming, Peter, at a high level. I front run that transaction or to get it into the block. But basically, I do something I'm not allowed to do. I steal a private key and I use that private key maliciously to either put a false transaction in, or to cancel a transaction that someone else made, or to send someone else's money to me. But the technical word for that is I'm doing immoral behavior at best. Crime is the other. This is what my lawyer friends call it. Is that's a crime, that's a crime, but it's also an attack, right? So it's an attack on the system, and if I know the system is being attacked by someone doing this crime, I don't feel safe using it. So think of it as I've got my money in a bank, there's bank robbers in there doing crime. I'm also sad that my money is in that bank because those bank robbers doing crime were probably also stealing my thing as well. So I'm now less likely to use and trust that system. I'll try and pull it. Now, if I can pull my money out of that bank, which I can in this case, I will. So you've got two things going on. One, crime, but the other one is everyone suddenly loses trust in that institution, that particular blockchain that is doing a thing, right? It's moving money around, it's holding assets, it's performing a useful service of permissionless money transactions and security, except now it's not because of the crime, otherwise known as the Shor attack. So that's a different one. That's a far more sort of fast-moving, malicious attack that is legitimately straight up and without ambiguity about the meaning of the word an attack. But it is also a crime, is the point I'm making. So it's a computer science game theoretic attack on a system, on a distributed system, but it's also something that we would identify as a bad thing. Whereas that's not the case with the Grover one. The Grover is I just bought superior technology to the party, and because of that, I win. But that's harming other people that bought less superior technology to the party. So from their perspective, bad. But so what the paper does is it sets these out. So the point is that as quantum tech and advances as this sort of hardware develops, we can run both of these algorithms. One is, they're both attack-like it. They're both a little bit attack-ish, but one is clearly one is sort of fast-moving, stealing stuff. The other one is just winning all the time. But in both cases, they're not necessarily good things, right? In one case, the arms race is accelerated. We're using a lot more compute to do the same thing. The competition has washed out because one team keeps winning. And now I'm like, okay, the system's not quite working as well as we'd hoped. In the other case, it's just, wow, I don't trust this anymore. Someone's stealing money, and that's not good. I'm going to leave that thing. So, in both cases, broadly-ish bad outcomes, but one is a lot worse than the other. But you can use them together. They're both software, right? They're both sort of, once you have that compute capability, you can run either of these attacks. I think that's true.
So to me, the Shor attack seems a lot worse, right? So the Grover expansion, I love the phrases they use, Grover expansion and Shor attack in the paper.
Yeah.
It's very, very clear. But
Yeah.
the Shor attack seems like the failure of the blockchain could be a lot worse. And I realize there's mitigation techniques with post-quantum crypto, upgrading, forking. Let's assume, there's a quantum computer out there somewhere, some government has it, and this begins. What does that failure actually look like? What will we see?
So at first, nothing, because again, this attack, the Grover attack in key instance, is just better security coming to the party, and one or the addresses using that technology just systematically winning more. But if I had that technology and I was deploying that algorithm, the first thing I want to do is I've got an amazing It's like the same situations. I don't know how much you're into sort of Second World War sort of documentaries, but there's a standard sort of trope in that universe of, if you have amazing decryption, or encryption breaking technology, how do you use it? Because if you've got it, the last thing you want to happen is to let the enemy know that you've got it, because then they'll stop sending messages through the channel that you can break. So this is the story of a lot of Cold War, Second World War type things, was having this amazing technology but deliberately not using it for fear of wanting to keep it for when you really, really needed to use it in other sort of situations. So the basic sort of game theory of having an amazing sort of what is basically decryption technology. I can break your cipher. I can break your cipher and read what you're sending and mess with that, or I can win when you don't think. Is I never want to let you know I can do that. So I have this amazing quantum compute technology. I've got the Grover algorithm. I've got this. I'm just fully armed, ready to go. The stupidest thing I could do would be to fire all my guns, right? Because that would immediately let you know what capabilities I've got. You would immediately either go, wow, that's not playing in that sandbox anymore, and you would move all of your coins off that thing, or you would stop using that tech because now it is vulnerable to attack. So what I have to do if I have this amazing technology is I have to use it in such a way that you never know I'm using it. And again, it's
So don't go for Satoshi's Bitcoin first.
yeah, right. So don't do anything that only someone with that technology could do, right? So there's a few sort of heuristics you would use. You would not go after anything big and obvious. You would not do a massive heist. You would not do anything that would alert anyone to your technology. It's like if I had mind reading capabilities, that would be an amazing advantage to me. I could go around and see everyone's secrets, but the crucial thing is I can never let anyone know I've got that, because no one would ever speak to me again, right? No one would ever come anywhere near me, because I would have outed myself as a potential malicious actor. So this is kind of what the paper is really about. It's saying, okay, so given that game theory, given even if I know you've got that technology, you can't obviously use it straight away, because the minute you start to use it in a detectable way, I know you're attacking me, and I'll take protective measures. The perfect mark, right? As any sort of street con artist knows, the perfect mark is someone who never knows they've been taken, because they don't resist, they don't afterwards complain, and they don't alert anyone else to the presence of the attack. So this is what the paper was trying to solve, is that problem of the basic game theory of having an amazing attacking technology is that you have to use the attack in such a way that no one knows they're being attacked. And again, that's not a unique thing for the crypto situation. That's any mind reading encryption capability, any massively superior technology that gives one player a massive advantage. You either use that massive advantage, so we're getting into Cold War game theory now, but there's two ways to use a massive technological advantage. One is never use it, and just use it only when you absolutely have to, and super secretly. The other way is you say it as loudly as possible. And that was, if you think the sort of mutually assured destruction nuclear weapons thing, the whole point of having nuclear weapons was to say it as loudly as possible that you've got huge nuclear weapons, they're enormous, they're mounted in space, they're pointed at everything, and I can't control them. You have to add that, and I can't control them, because then, or I'm reckless, and possibly crazy. And this is, you think, a good example of this is North Korea right now. The whole point of having nuclear weapons, even if they don't work, is to pretend they work by trying to fire them a lot, but also to pretend that you're crazy, so that there's no rational play against you. So, in the quantum crypto situation, there's no real advantage in attack, because what you're trying to do is you actually want to use them effectively to steal. Unless you're trying to scare other players off, right? If you're wanting to scare other players from even developing the technology to compete with you, you want to say, look, my quantum is just so big and so amazing, mounted in space, it comes from Mars, and I'm completely crazy. You would be insane to try and develop a quantum compute that could outcompete me. So those are your two plays, either as loud as possible or completely silent. Everything else is an unstable equilibrium in that space. So this is the broader challenge of who and what is developing quantum compute. Because if nation states are building quantum compute, and again, for the same reason that quantum compute is a defensive technology, I can use it to encrypt and protect all of my digital assets or my digital secrets, my data. Or as more and more of the economy becomes digital assets, then the way you protect them isn't with guns and soldiers. The way you protect it is by wrapping cryptographic shields around it. Right? It's a defensive weapon, and the more I can do, the more wealth I can create, and the more wealth I can protect. Right? So that's technology as a defensive weapon. But the thing about that compute capability built up by a nation state is that it's a massive defensive technology. But by pushing a few buttons, I can immediately turn it into an offensive technology. I can use it for stealing someone else's assets. And that, again, that's the way weapons work, right? Is I line up all my weapons around my valuable assets, and I say, come near these valuable assets, get the weapon, right? Defensive. But the minute my weapons are bigger than your weapons, I can go, okay, I like your stuff, take. And that sort of, again, that's an arms race, right? That sort of mutually assured destruction. The only way you get peace in that world is if no one ever gets an advantage in the weapon over the other one, otherwise they're incentivized to attack. So the rational play is to talk about how big your weapon is, to make it seem bigger than it is, to provide ambiguity about how many there actually are. They're in space, they're on Mars, they're buried in silos. We don't even know how many we've got. We've lost count. You strategically create ambiguity about the size of your arsenal, just to make it uncertain on the other side about whether they can attack or not. So again, it's all game theory. This is game theory from top to bottom about the offensive capability and the defensive capability of that. But so, I mean, the question, this goes back to the if a state, this goes back to the question of who or what is developing this capability. So if a state actor is developing it, if the American, I don't know, CIA, whoever, a branch of American government is developing it, or a branch of Australian government is developing it, or a branch of Taiwanese or Chinese government is developing it. Rule number one, never say you've got it, right? Because if I say I've got it, then the other side has to develop a corresponding capability. Rule number two, if you don't have it, absolutely say you've got it. Because then the other side is sufficiently threatened that you've got it that they can't. So you're massively incentivized to lie all the time about this. So this then goes to the, if the Australian state, say, developed amazing quantum compute, And the basic game theory in a global geopolitical next, in our lifetimes type scenario is, if you've got it, you must never admit it. Would you use it for a crypto attack? Because that, if I use it for a Bitcoin attack and go, yay, I've just made like $3 billion. This is amazing. And it only cost me like $1 billion worth of research to get it. Clear win. Now you know I've got it. And there might have been something more valuable I could steal, right? If I only get one shot at doing this. The thing I could steal could be, secrets. It could be, I could just go in and melt the entire US banking system with this, or wipe out all of the passports, or there's lots of things I could do with that. Or I could use it to provide protection to all of the people I want to protect. Again, lots of uses for it. But the basic sort of challenge here is, if I use it, once I reveal I've got it, I'm in a different world than if I've never revealed it, because now I've got it. Now you'll protect either harder, or you'll invest more to come back at me on that. So it's the same dynamics that we see in offensive and defensive conventional weaponry also apply to this. But what's weird and different here is that instead of protecting physical resources, my land and my people and my buildings, I'm protecting digital resources, my data, my financial data, and more what that means is my claims of ownership over all my digital resources. And what do we mean by digital resources? The stock market, the bond market, the quadrillions of wealth that's wrapped up in those large-scale financial assets. Like, if I was to try and attack something, I wouldn't steal the crypto. I would melt the bond market down, or I'd just melt down the debt market with that. Like, there's a far richer target. And again, you'd imagine that players will do that. So, very long story that I'm sort of coming back to, but this is how we would know that someone was attacking, is that we'd start to see either inflation moving into the cryptocurrencies, which would mean that the future prices of them would change, which would mean that the current yields on them would change, which would mean that the spot prices would change. So I would start to see movement, I would start to see repricing of crypto assets in terms of their spot markets, because the future markets are changing. And this is how I would know that one or other of these attacks was happening, is just by watching the bond market. But that's the beauty of this argument is that's exactly how I would know that any asset was being attacked, right? So there's a lot of sort of famous stories from the 19th century involving sort of European bond traders knowing that Napoleon had successfully history's wrong here, that Nelson had successfully defeated Napoleon, that it happened not because the message came back from the battlefronts, but because bond prices on the money that Napoleon had borrowed were tanking. And that was revealed immediately in the Paris sort of stock exchanges and bourse, prior to the horses running back with the wounded soldiers even saying that. So we could see that an attack had failed prior by looking at the bond prices on the debt that was financing the attack. And again, that was fun story from the 18th, 19th century. It's still true for future attacks and so on. So again, this isn't a sort of weird, crazy idea we've made up. This has always been how financial markets are super efficient. They work at the speed of information, and financial prices traditionally move faster than military information, just simply because higher incentives. Eventually the soldiers will get back and complain. But
you were talking about a Cold War style game theoretic analysis, but inevitably there's a point after that at which the quantum computers become ubiquitous, and it's just generally understood that they're out there.
Yep.
States were highly shielded, but in the commercial sector where any hacker could go buy one, there's going to become a point in time where it's just generally understood that conventional public key cryptography isn't good anymore. And at that point in time, you would expect that the market for cryptos that are vulnerable to that, they would just collapse because people wouldn't have confidence in their integrity anymore. So the question is, if you're basing this thing on bond prices, and bond prices, the spot price is calculated using some discount model based on expected returns at some point in the future, if the expected return on, say, Bitcoin, which uses cryptography that's vulnerable to a Shor attack, if it's expected that at some point, whenever it is, it's going to have zero value, why is it that the current day forward price still has value?
Just uncertainty about that. So, I mean, the equilibrium here is zero, but there are frictions in markets. There are uncertainties about that. I'm waving my hands and saying lots of frictions and uncertainties and just things in the system, but that are going to slow it down. But the limit here is clear. It goes to zero. But in actual bond markets, the thing about bonds is that they're not just unique, isolated objects. Some bonds are made of other bonds. If some bonds are locked up in a portfolio, and that portfolio has been securitized, and that securitized has been wrapped and then split up and sold on other things, and then that has been used as a collateral asset in some other insurance product, I have to unwind all of those trades to get there. And if one of those things is a 3-year thing that was mostly illiquid until the 3-year strike comes through, then it's stuck there. So the extent to which there are frictions, trading takes time. The extent to which trading is leveraged or stacked, or there's other sort of things that are derivative based upon that, and those things have contracts fixed into the future. This will take time to unwind. And again, we see this when housing prices collapse, for instance, when something was revealed to be, when turned out there weren't actually houses there was just, or the mortgages were all fake. That took years to unwind. And, during that process, you get out as fast as you can, but there's also a queue. Stock markets are still, they're mostly made of computers, but some people get to the front of the queue faster than others. You can get sort of stuck in a liquid position behind that. So again, lots of reasons why that could play out slowly. But in this case, by far the major factor here is just uncertainty about, I don't know whether you've got the thing you say you've got. Because I've got a very powerful incentive never to reveal it. Now multiply that by every possible actor in the system. It's not just the state actors, it's all the private corporate actors that are building this tech. Again, if you have an amazing superior tech that you can use for both crime and protection, but it only works if you don't know I've got it. I'm not going to tell you I've got it, which means there's uncertainty. I'm forming an expectation that's a conjecture about a conjecture about a conjecture. So for all of those reasons, even though the equilibrium is pretty clear, eventually we shift from classical compute through to quantum compute if it is superior on every margin. I mean, there might be some margins that it's not, and in which we'll have a mixed system that'll be partially classical, partially quantum, but, to optimize the various speed or the types of algorithms you want to run on it, or and so on and so on. So, again, we've got a mostly digital financial system these days, but banks are still physical objects with actual human beings using pens and pencils behind glass with telephones and and little bits of paper. That still exists, right? It's still there's aspects of the modern financial system that still look like the 18th century, and that's for reasons. Many of those reasons are stupid, but most of the stupid reasons are stupid because they're regulatory. It's the law. We have to have a physical copy of it. So even though we can move all these transactions at the speed of light, we have to have a physical copy, and it has to be sent through the mail to a address in Canberra, and that takes 4 days, and therefore that's the speed of the transaction, 4 days for it to clear. Again, there will be all sorts of things that slow or often regulatory, but could be psychological, could be behavioral, could be just look at the humans with their untrustworthy, that are not trusting the machines reasons. But none of our systems are pure. They're all sort of stacks of amazing tech, and then slightly worse tech, and then usually some sort of stuff that hasn't changed for hundreds of years. And that full stack is the financial system, or is the identity management system. And you add quantum on top of that stack, you'll push some of the things faster, but not all of it. And it's not always obvious where it bottoms out, or because wherever it is slowest is also the most profitable part. It's also the part where I can get the most margins. So the modern financial system, with its T+3 clearance, even though we can move money at the speed of compute, that 3-day settlement is where all the money is made in the modern banking system, because that's a free float for finance. So those flaws in the speed and efficiency and security are often where the rents are captured in terms of money and profits by those who can control and maintain those bottlenecks. So there's often technological competition over bringing in new tech always runs into protection of rents in the system, and that's the world we live in, and it will also be the world we live in 10 years, 20 years time.
Mm-hmm. So what do you see as the solution to all of this? I mean, people are talking about post-quantum cryptography. What else is there?
Yeah. Look, first point, you can't stop tech, right? Tech is a creature that comes into the world and it eats everything. All we're discussing is just how fast that process happens, and how what the staging of that is. The equilibrium here is clear. A better tech comes in, it will eventually dominate. But my point is, but there is a lot of things that'll slow it down. A lot of self-interested reasons, a lot of stupid reasons, a lot of blah blah blah, game theory reasons, and all of the this is interesting because of those reasons. So we've got one generation. We started off with pen and paper and pencils for doing lots of administration and finance and stuff, and then we digitized it over the course of the last 100 years, right? IBM, first mechanical computers, and then digital computers, and then valves, and whatever. And we're 120 years later, and we still haven't completed that cycle. And that'll continue. Now there's some new tech coming in that's even better on many margins. It's cheaper. It's amazing fast. It's massively parallel. But and it will eventually win. But the interesting story, the story that we will experience in our lifetimes, is that transition, where this amazing new tech that we know will eventually win. But we don't know exactly when, exactly how, and who's going to make what money along the way, and who's going to block it for whatever reasons, and what's going to blow up unexpectedly, and what all of those sort of details. That's what's uncertain. And behind that is also, I don't. The thing I can't see is I rely on you, Peter, to tell me everything about the state of quantum research, but I know even as smart as you are, you don't know exactly what's going on, because there's a lot of stuff that's hidden from you as well.
Sure.
But I need to know that. I need to know exactly all the hidden stuff. Who's investing? How much money? How successful are they? What are they using it for? You multiply those uncertainties, that equation with 47 variables of uncertainty, all multiplied together, and I know in the end it equals 0, because it will. But through that process, it's there's a lot of uncertainty with that. So long term, it's obvious it's going to win. Long term, the entire sort of financial system and administrative systems and data systems and compute systems will move to the best compute technology, and all our infrastructure will be replaced. Absolutely, going to happen. What I don't know is when, and I don't know who's going to stand in the way of us, and who's going to be in which order, and through that process. So but that's, and I'm confident of that, because that's what's happened with every single other technology, right? I mean, we use induction for cooking now in my house, but I still light fires sometimes, right? That's a 40,000-year-old technology that I still use for solving my how do I cook my food problems occasionally, not all the time. It's fun, but technologies don't completely replace the inferior technologies. We have a stack, and I think the interesting questions are, how do we do this in the least stupid way? How do we end up designing regulations that are built around a world of classical compute that is still built around there's kind of humans in the background writing stuff down occasionally, and that this is a multi-state actor universe and competition policy and blah blah blah. How do we accelerate the development of the goods technology in such a way that we don't do anything stupid with it? And again, this is the story of every single technology. I wish we had amazing nuclear power plants, but we don't, because back in the 60s we got scared of it and we made it more or less illegal to experiment and build that sort of tech. And now we've got a global climate crisis because we don't have easy access to a very cheap and safe technology to generate energy. So we've absolutely screwed this up predictably with almost every technology we've built in the past. We will definitely do it again with quantum. We will doubly definitely do it with quantum, precisely because it's a weapon. It's a defensive technology. I can use it in finance for making money, for stealing money. I can use it in the military for stealing secrets and protecting secrets. It's a technology that there's kind of all I need is a few, theoretical physicists and some, super cooled helium and some sand maybe, and it's a technology that is potentially buildable by any actor, whether state or private. It's within the realm of financing. I'd probably need more than $100, but I probably need less than $1 billion. There's a lot of actors in the world are in that zone, and there's a huge incentive to build it. But all technologies are eventually regulated because that's just what we do, politics. The reason we regulate technologies is technologies create rents. They create advantages for some, and the world is made of delicately balanced rents and advantages to protected elites and others. And the world is made of many nations and their agents competing with each other. So, we're going to mess this up. And I think that the only real sort of interesting question for me is just to try and understand how we're going to do that. What are the ways to minimize that? What are the ways to get the most socially beneficial advantages from this compute, which are, computing. We use compute to produce goods and services that benefit the people. We want to we've got a new way of doing more of that, so we want to do that. But this exact same technology can also be weaponized. So we want to minimize the use of that, or try and stop the fear of it being weaponized from minimizing the development of it for good uses. And again, your case study here is civilian nuclear technology versus military nuclear technology. It's the same technology, but fear of one use of it led to underdevelopment of the other use of it. And at least half of all the problems in the world today are because we don't have cheap energy. Including the very discussion we're having here about proof of work algorithms. So again, that's not the answer to the question that I think you're hoping for, but I think it's...
So you don't see regulation as the solution?
I see regulation as inevitable. I just hope we don't do it horribly, but I'm pretty confident we will. Because we've done that with every other technology. I think we've got a bit of a moment in time now where the future hasn't quite happened yet. These are all still a little bit over the horizon. So we don't have bad laws on the books because we don't have any laws on the books, but they will be coming. And at some point, quantum will be declared a special technology that is only to be used by those with special quantum licenses. And those quantum licenses will be given to friends of the elites. Hopefully you'll get some, Peter. I'm counting on that because I want one.
I don't know many elites.
Well, no, look, if you can make quantum computers, then you are definitely one of the elite.
No,
and you'll be given special privileges. Yeah. So, special friend. I want to exploit that. But again, there will be a process by which a technology is legislated, regulated, tamed, brought into the social system. And again, we do that for very good reasons, right? But the process of doing it is usually not done by far-sighted engineers seeing the future and thinking about the best that we can do for humanity. It will be done by politicians, usually in marginal electorates, trying to win political battles
under the influence of lobbyists.
Yeah. So it's going to be the worst possible scenario, but that's going to happen. So we need to sort of understand, all right, given that that's inevitably going to happen, how do we sort of prepare the ground so that we... So, I mean, I think the purpose of this paper was just to sort of help us think about this. There's a bunch of theoretical arguments and math and so on in that, but the basic point, the one sentence summary of the paper is you can use quantum compute for finance, you can use it for good and for evil, but the amazing thing is you will never know. That if it's being used for evil, you will never know that that's happening. Here's one weird trick that you can use to figure out whether you're being attacked, and that's look at these particular margins on bond prices. So trying to sort of help people understand what's coming. But the point of that is, if I know that the attack can be seen by just looking at well-functioning financial markets, I don't need a law that says it's illegal to attack me using quantum in finance. Like the market will take care of this without having a law that is unenforceable and unworkable and ultimately harmful to try and protect me, that won't ultimately protect me.
You could also argue that if there's a law in place, that provides weaker protection than what the market indicator provides.
Yes, the law would be even worse because now I believe that the law is protecting me when it's not, and therefore I'm not even trying to help myself. So you've got a worse situation. But again, that's the story of almost all financial protection laws. They give a false sense of security. They mostly benefit those that are trying to exploit you. Again, regulation, is not magic. It's just more.
So this is a situation where the market knows best.
This is the situation where we've made the argument about what it would look like if the market knows best. And right now, because we don't have the quantum finance consumer protection bill of 2028 with all of the earmarks and nonsense added into it yet. But we will. That's absolutely coming because why wouldn't you? You'll get votes. But what I'm pointing out here is that we've got a little moment in time where if I was to build such a market, I could. Not illegal yet. And if I built it, it would actually be useful because it would work. It wouldn't, and so again, I like, economists, hand on heart, economists generally believe that markets on net are useful mechanisms for aggregating distributed information. Right? That's why we like markets. They're not magic either. They're not magic just in the same way that laws and regulations also aren't magic. But markets are powerful mechanisms that make efficient use of distributed information. And a quantum attack is a situation where you want distributed information to get into a signal that I can read. So markets are a pretty good solution to this. Maybe there's better solutions, but there's a lot of worse solutions is the point.
It's good to hear a different take than the usual doom and gloom of quantum computers are going to destroy all the Bitcoin and everything's going to collapse and the world is going to get caught on fire. So this is, I have probably another million questions to ask about this, but we're getting to the top of the hour. And thanks, Jason, for coming on today. Where can we follow you or get more information about what you're doing?
So we're on the internet. So I work at Blockchain Innovation Hub at RMIT University. If you type any of those words, you'll find us, or follow me on Twitter, X. Follow me on X. on Prof. Jason bots.
Perfect. Thanks so much. And
Thanks,
thank you all
Jason.
for listening. Thank you all for listening today. Thank you, Peter, for coming on and co-hosting. So subscribe and listen to these episodes wherever you find your podcasts, and see you next time.